First, let's welcome back John Najarian. John, thanks for sticking around.
Great to be back.
Well, glad to have you as usual. And I know last week's show we talked about this, and I know you saw it because I know that you sit home every Sunday morning and you watch our show here on Newsmax. But we talked about the fact that it's funny because everyone talks about how interest rate increases affect the bond market. But in some ways, interest rate increases have as much of an impact on the stock market as the bond market, because the stock market is really a discounted future earnings flow. So what do you think this interest rate trend means for the stock market over the next few years?
Well, what I've liked to say, David, is that it's the acceleration or the speed, the velocity of interest rate increases. We all know that the Fed is going to be increasing rates unless something bad happens, which obviously none of us are rooting for that. But when we see that big jump, you said after the election that we had that 60 or 70 basis point jump in the 10-year. You're 100% right. It happened very quickly again from November of 2017 till basically the first week in February. And it's those quick moves that startle the markets. So I think overall it's undeniable that interest rates are going higher. But I think if they go higher at a slow and measured pace, I think that's something the market will tolerate. The market won't tolerate it if they go up quickly.